Toronto real estate market just had one of its slowest months in the past few years. You want to find out more about where the property values are going? Continue watching. Now, let's dig deeper into the stats for the month of March of 2025 for Toronto real estate. The average sale price has increased from year to date to $1,067,000, and that's an increase for about 1.6%. However, the number of sales has decreased for about 16%. This shows that the slower activities for the past few months, and as you can see, the number of days on the market has also increased. This indicates a slower market activity. Now, there's a 4.7 month of inventory in the market. Keep in mind, 70% of these properties that are currently listed are condos. So only 30% of them are freehold, detached or semi-detached homes. And that side of the market is actually quite active and there's still a lot of demand there. But on the condo segment, because there's so many listings, this can actually skew the numbers. However, even in condo market, the condos that are much nicer in terms of the building, if there is an established building that is well maintained, those condos are actually selling relatively quick. In brief, slower market activity for the month of March showed 23% decrease compared to last year this time. Average sale price also fell for 2.5% year over year to almost just shy of 1.1 million. At the same time, active listing rose significantly in the GTA, which means there's more supply and that will continue to put downward pressure on prices. Some segments of the market, especially on the low-rise freehold, are actually seeing a very active and a lot of demand as is still available. For example, I was looking at a couple of properties with my buyers in Riverdale, which is E1, that is east of Don Valley. There were 37 new listings in the month of March for semi-detached home. And out of the 37 new listings, 23 of those sold in an average of 15 days for at or 14% above market price. Again, sales activities slowed down in March due to the overall financial and political uncertainty, and obviously that creates an uncertainty with buyers. Therefore, they'll put their main decisions, especially buying a home, on hold. On the other hand, fixed rate mortgages are now somewhere between 3.8% to 4%, which is the lowest in 2 years. And as a result, there's going to be improving affordability in overall, since the prices are actually started to fall. However, the reduction in the prices are not significant. And again, depending on the asset class and what segment of the market you're looking at, that micro market situation where every property can be, different than the, neighboring area. So again, pay attention to what actually you're looking at. The variable rates are getting actually closer to the fixed rates. So give or take, you're still within that 3.8 to 4.9%. This is actually a lot lower than last year this time, which means the overall monthly payments are going to be lower. The buyers are actually going to pay less in interest, and this will help the affordability. And remember, there's anticipated Bank of Canada rate cuts for the month of April, which will help with variable rate prices. And market is actually going to be well supplied for the spring market, as a lot of listings that are being prepared. I have sellers that are preparing their properties for sale in the spring. And I'm sure there are a lot of other realtors that are currently preparing the properties for coming to market. And when the weather is nicer, people will tend to go out more. Houses are actually more presentable when the front yard is done, when the backyard is clean. So there's going to be a lot more supply coming to the market, but whether or not they're going to get absorbed that fast, that's a question for the market that you're going to actually follow it that closely. As of the recording of this video, you can see the difference between variable and fixed rates. So they are almost within the same range. So if you were asking me, I would say, go for whatever works for you and for your financial situation. However, if you are looking for some opportunities, maybe starting with variable at this point, and as soon as you feel like this is the right time for you to switch to fixed in order to fix that lower interest rate, maybe you should do that. So talk to your mortgage broker and always monitor what the rates are currently. Even if you're up for renewal, maybe that would be a good idea to, stay in touch with your mortgage broker and your lender and see what options actually are available to you. As I mentioned, there's a lot of condos right now in the market, and majority of those condos are investor bought. And I've seen a few within the $550,000 range. Those are like one bedroom or maybe studio apartments in downtown core and surrounding. So here's an example to see how much actually it's going to cost on a monthly basis owning a unit like this. So if the purchase price is $500,000 and you can secure 3.69% mortgage with 5% down payment, which is the minimum, which is going to be $25,000 on a 25-year amortization, your monthly payment, including the CMHC insurance, is going to be $2,500. That is your mortgage payment plus the CMHC insurance, because you are not putting 20% down. So anything below 20% down requires CMHC insurance. So overall, you're looking at $2,500 a month for your actual mortgage cost. Right now, you can actually rent the same unit for $2,300 maybe. So the gap between buying and renting is actually becoming tighter and tighter. So this may indicate that there is going to be opportunity for first-time home buyers to enter the market. Yes, overall, it's going to maybe cost more, or let's say $300 to $500 or more on a monthly basis, because you have to add the property taxes and the maintenance fees. But the gap is actually small enough that may start looking into buying versus rent, because eventually you're building equity. The market is not going to stay like this forever. And given the fact that there's not going to be a whole lot of new condos coming into the market in the next 4 or 5 years because they're not selling anything, that indicates that there is an opportunity for first-time home buyers to enter the market right now. And there's a lot of incentives for the first-time home buyers that you can take advantage from. So talk to your mortgage broker, talk to your financial advisor and your realtor to come up with a strategy that what works for you best. If you've been following me, this is one of my favorite charts because it actually shows the average sell price versus the Bank of Canada overnight rate. As you see, as the rates started to drop in April 2024, prices are actually, not increasing as significantly. So they're kind of going sideways. So again, this also shows a little bit of, consistency in the market, and the fact that you're not going to see the significant increases or decreases like what we saw in February 2022 up until April 2022. So this brings a stability, and you can actually kind of predict what is going to happen and what to expect. So this will actually help making an educated decision. Here you can see the overall activity for the month of March. As you see, there's going to be a whole lot of negatives here on the sales side. So this shows the number of sales in Toronto, Peel region, and in Ottawa. So it's negative across the board. However, on the average sale price, detached homes in Toronto have increased for about 1.1%. Semi-detached, as I mentioned, they're kind of hot commodity these days. So they're 2.6%. Townhouses and condos actually have come down a bit, but they're kind of sticky and the prices is still, within the range. So if you ask me, you're not right now looking at actual market value. So you're not overpaying anything right now, especially in the condo segment. So there is a good chance that if you see a condo that you like and fits your budget, the market value is actually what you're going to pay for. You're not going to overpay, and in long term, it's going to be in your benefit. Here you can see a sharp drop in the number of sales from March last year, and prices are relatively within the same range. However, on each segment, you see the average sell price that are kind of still hovering around what they did last month. So what will happen now? What you should know is that the political and financial uncertainty, especially tariffs, will impact the market. And however, the impact may not be as bad as what we thought it's going to be. Mortgage rates are kind of on decline. The 5-year bond yields, which is the main pricing mechanism for fixed mortgages, are kind of hovering between 2.5% to 2.7%. This was 3.6% last year So that shows that, the trend is downward, and you could see the fixed mortgage rates within the 3.7 to 3.8%. And a lot of people don't actually remember that this is the exact same rates before COVID in 2019. I remember renewing my mortgage in 2019 at 3.5%. So when you look at it, it's not that bad. And plus the fact that the prices have come down from the peaks, you're actually looking at a very good opportunity in order to enter the market. And like I said before, if you're not planning to hold on your property for 5 years or more, there's a good chance that, in the near term, you're not going to see a huge appreciation. The lower segment, however, is different. There's going to be always demand for it. And there's going to be a lot of people who want to sell their condos and move up to semi-detached home, or they're selling their semi-detached and want to move up to a detached home. So the demand is always stronger depending on the neighborhood and the school district. So if you are within that area in the market, you need to be prepared. And if you're a buyer, an active buyer, make sure you have all your ducks in a row so you can act quickly on a property that you feel it's going to be the best one for you. Here's an example of the property values and payments from April 2024 to March 2025. So since the interest rates have dropped, you see there's an increase in the number of, market activity, especially on the detached home. However, with the lower payment, it actually helps with affordability. On the single family homes, still in the popular areas with good school districts and parks, you see a lot of activities. Some properties are actually getting multiple offers. I've seen a few this past 2 weeks. Inventory will start to build up as we get closer to the spring market. It's April and still snowy outside, so might be a little bit of late spring market, but there's going to be a lot more properties that are coming to the market that spring. However, on the condo segment, if you own a large condo with a great floor plan and in a well-established building, they're selling fast. Even though the maintenance fees are high, but there's a lot of people looking for those condos. Actually, a lot of downsizers, they don't actually really care that much because they're buying in cash. So they're buying those condos and also going through a major renovation. I've seen a few myself, actually in the same building with the water views. There's one condo that was listed for about $1 million. It was not renovated. And on the same building, one floor up, there was one unit that was fully renovated and it was selling for $1 million more, and actually got an offer after 7 days being on the market. So that tells you where the market is. Of course, the 500 square feet, shoebox condos with blocked views, those are not going to be on hot demand and still, going to have hard time selling. In 2025, there's 24,000 new units that are expected to get completed and enter the market. So there's going to be a lot more inventory that are going to get added to the condo segment. So don't expect any meaningful appreciation for the condos. However, the number of sales on the new condos, especially on pre-construction, which is basically zero at this point, indicates that there's not going to be much more that are going to be get completed in 2028, 2029, and beyond. So if the supply remains low at that point, there could be a potential for price appreciation. On the other hand, the multifamily building permits, which is typically your purpose-built rentals, are at their highest. This is already a soft market right now, so I'm not sure with more purpose-built rentals that are coming to market, how it's going to affect the rental market. One thing I'm sure, the more supply means more pressure on the rent value, so therefore the rents are expected to actually decrease. On the other hand, the single family building permits are to the lowest as they've been, even if you go as far as 90s. This means single family buildings are not going to get finished or anything completed in the next couple of years. And like I mentioned, there's always going to be demand for low-rise freehold single families. So anything that is currently available in the market are being actually scooped up. If they are already renovated and users are actually very interested in those, And builders or renovating companies, they're actually seeking more opportunities on the renovation side, but still, they're holding off because of obviously all the uncertainties. Here you can see the GTA new condo expected completions up to 2030. As you see here, there's going to be basically zero completion expected for 2030. This is going to put pressure on the condo prices and the condo market in overall. However, it's 5 years from now, so many things can change. And it's going to be really difficult to predict, but if you just look at the numbers specifically, this tells you a lot. In summary, the demand for low-rise single-family homes is still strong, and there's always going to be demand for it, especially on the nice neighborhoods. The condo market will remain flat and may see another slight price decrease. Investor demand is, basically zero at this point. However, the ones that actually do know where the opportunity represents itself, they'll actually enter the market and will take advantage of the current situation. Variable rates start to catch up with fixed rates. And if you are going to get started for your mortgage qualification or you're renewing your mortgage, you might be in a better position than you were maybe a few months ago. And if you're planning to make a move in the next 6 to 12 months, make sure you have all your ducks in a row. Get your pre-approval. Make sure you're monitoring the market and you're talking to the industry experts. Educate yourself so when you see the property that fits your needs, you can quickly act on it and take advantage of the market condition. Thank you for watching. My name is Pasha Varazan. I'm a local real estate advisor here in the city of Toronto, and we help a lot of buyers, sellers, and investors with the real estate journey. If you're looking to buy, sell, or invest, or if you have any questions or you want to be updated about the current market status, feel free to book a call with me. You can use the link down below, and I'll be happy to have a chat. Thank you.